Hello everyone, welcome to my YouTube channel. This is Nirav, and in this session I'll be discussing the Elliott Wave Principles and their application on the Nifty. So before moving any further, please read the disclaimer on the screen, which states that I'm not soliciting any buy or sell here, and all the views presented here are purely for educational purposes only. If you use these views for your trading or investing, then you shall yourself be liable for your profit and loss, and I will not take any responsibility for the same. Okay, so let's get continued with the video. So in this video, before moving any further and looking at the basic count and the possible future progression, I would like to discuss the powerful way in which Elliott waves help us to think and analyze the markets. So as you already know the basic laws, if you have watched some of my previous videos or any of my previous videos, you know this much that the market moves in a 5-wave progression, and in this 5-wave progression there are certain rules that are followed, and one of those rules is that the wave fourth, which would be this wave in this regard, does not enter into the price territory of wave 1. Even if it enters, then it does not stay there. That is, wave 4 cannot end within the price territory of wave 1. So this is one of the 3 basic rules of Elliott Wave Principles. And why am I discussing here? To show you that how this simple rule played a very important role in Nifty right now. That is on 9th of November. Yeah, 9th of November, when the US elections results were declared. So as per this rule, the 4th wave cannot come till here. Let me draw an arrow for the first wave. Okay, so this is the first wave here. So the 4th wave can up till here or here, but it cannot end within the price territory of wave 1. That is what the rule states. So let's look at the application part here. So if you have already been following my counts, then my count says that this is wave 1 completing here, wave 2, and then the 3rd wave completed over here, and the 4th is either completed or is in progression. That is what my current view is. So let's just draw a line on the wave 1 boundary, or the top of wave 1. I would come somewhere over here. Okay, so after this, drawing this line, you can see that on 9th of November Nifty fell down and it came very close to this level, but it did not close below this level. That is the most important thing. So if someone knew this basic rule of Elliott wave, not the complete theory but this basic rule only, and if you know the right count at that time, then you can obviously know that this is a buying opportunity. And that is what actually happened. If you look at the chart, the market actually opened somewhere around 80.26 or 80.30, let's say 80.30. So the market first opened at 80.30 and then it fell just up till 80.06, let's say 8,000. So it fell up till around 8,000, and the point of invalidation was lying around 79.76. so that was our point of invalidation. By point of invalidation, I mean that if the market has closed below this level, penetrated it and closed below it, then our this count would have been considered incorrect. So since market fell down, it did not close below the point of invalidation, so this was a buying opportunity. And as you can see, there was heavy buying in this market, and it went up like 500 points, whooping 500 points from here on. So this confirms 2 things, that even if you know the basic rules and the right counts, you can have good trading opportunities. I mean, these opportunities don't come always, but when they come, you gotta take them. These are the big profits, which is clearly visible on screen. And the next thing that is totally clear here is that Elliott Wave is the best tool that you can use in your trading, because you can look at any other method and no other method would give you confidence to buy in such a heavily falling market. At this point, some people would have been wondering that it's gonna fall and come below even like 8,000 levels and all that, and some might be thinking that it might go up, but they might not have the conviction to go long. But if you knew the Elliott Wave principles and you knew this basic rule, which is very simple rule, and I just explained it as well, then you would have known that this is a very good buying opportunity with a very small stop loss. I mean, if you did take the stop loss, it would have been a little bit lower, like a little bit lower than 79.76, to give the sharp fall a little bit of space. That would have been all. And see, the profit potential was somewhere around like let's say 500 points, and the risk would have been like let's say just 50 points or 40 points. That would have been the complete risk here, and with a huge profit potential there. If you know Elliott Waves, your trades are always highly confident, and that is what a trader needs in these uncertain markets. Okay, enough about the power of Elliott Waves. Let's just focus on the count, and I think that the fifth wave is completed here, and possibly this leg up is the first wave of a new upward move that is about to come, and this leg down is the second wave of a new leg that is about to go. And I think it could retrace a little bit more. This second leg might go a little bit deeper as well, but overall my bias would be to buy on dips, and I would like to keep my stop loss below this 79.76 level, as I just discussed. As per the one of the rules of the Elliott Wave Theory, I would like to keep my stop loss a little bit lower than 79.76, and I will look for some reversal signs once the market opens on Monday. Maybe it will open gap up, maybe it will give a little bit more correction. That is to be seen. And if I get a reversal sign anywhere above this level of 8,000, I will look to go long. Okay, and one more thing is that these levels I have already discussed, 84.40 and 85.50. The most important level would be this upper trend line though, because a pure validation or pure confirmation of the uptrend would only be there after this upward trend line is broken. However, if you are a bit of aggressive trader like me, then you will definitely look to go long in opportunities in this leg only. And that is basically the entire discussion I wanted to do. And if you like the video, then please share it and hit the like button so that I know you like the content and I produce more content like this. And you can subscribe the channel and enroll in my course if you want to learn more. That was all for this discussion, and I'll see you in the next one.